Good morning, everybody. Welcome to the Trading Market Technicals morning call video for Monday, October the 1st. First day of the month, first day of the new quarter. We ended the quarter on basically a sour note Thursday and Friday. It looked like a little bit of profit taking. We did have a little big spike up in the middle of the day on Thursday. We went over that. But we did end the month on a positive note overall in general. Anywhere from a lot of the major indices from 1.6% to 3.1%, and Nasdaq is up about 19% on the year, where Russell is literally a few trading days breaking its all-time high. Kind of crazy price action, and you'd wonder why. This is absolutely insane. Nothing really has changed, but when you have the Fed providing liquidity to the markets like that, and that's what you need to follow, and we need to really digest. I don't see a deep sell-off. I mean, anything could happen, but definitely a correction is needed and warranted if we're going to look to take out the highs. Overnight session, we did have some. We had some markets under pressure. Asian equity markets again remain under pressure. China manufacturing PMI printed both the official and the HSBC, which I mentioned last couple of weeks, below the 50 thresholds, showing contraction again. Market sold off on that, and then right around, I'd say about 3 o'clock in the morning, we also had PMI data coming out from the Eurozone, and that was also improved. And also that there was some press speculation about Greece that could receive 31.5 billion euros in aid. So that boosted the markets up as well, and now we're up 4.5 as we speak. So pretty roller coaster ride overnight, and that's basically going to take shape. This is again a news-driven market. Markets will be pulled on both sides, and that's why I said use caution when we're looking to hold positions right now until a lot of this stuff starts to digest. Okay, so we did have some weekend notes. We did have some bearish stories. I look at a lot of the headlines, not for trading, just for trend. What type of news stories come out, and how is that affecting the markets? And we did have a lot of negative news stories, basically talking about the fiscal cliff in the United States and how China, Japan are, their data is worsening as well. President election is here, so we got to look to that, and all keep that in mind when we're trading these type of markets. We do have our earnings coming relatively quick, probably in the next week. Alcoa reports that they usually start off earnings season, and it's going to be interesting to see what really happens here coming into this earnings season, because all eyes will be focused on earnings. We did have some pre-warnings on FedEx, Bed Bath & Beyond, as you know, Norfolk Southern, and really kind of took the market down briefly and then rolled the markets back up again. So this is what we're going to look for. Now, we are into seasonal weakness now, right into the next few weeks of October, and usually the end of October kind of starts to stage a low, market low. And again, guys, I keep saying this, but anything could happen here. I think all eyes are back on Europe because they're focusing more on what's happening with the bailout with Spain and Greece. So we're going to see how that affects the markets here. We'll take it one day at a time. I'd like to see a nice correction to 2, 3, 4% so we can buy into this market. And if that doesn't happen, we'll just have to look for selective day trades. And when I mean buy into the market, I mean put on a bunch of swing trades. But too risky for me. I'm not looking to put on a bunch of long trades and then markets down 30 S&P points overnight. And that's something that to me risk reward isn't there. So I want to run into the charts, and a couple things to take note of. Really, nothing much has changed from the NYMO, as you can see here. We actually rolling right into the 30, plus 30. We did get that oversold little area here, and now we're back down below 30 again. So this little area, we're in this basic parallel line within this area here. So something to keep an eye on. It's been relatively quiet with the NYMO, so we'll just have to monitor, see what happens. Now, the copper, and I mentioned this bull flag in copper breaking out of the symmetrical triangle. Now, if copper can hold its gains and start to take out the 395.4, then it looks like it'll be playing catch up to the markets, and that's a good sign if you're a bull. That's a very good sign to see copper move here, and this is something that I'm going to continue to look for. Now, I want to talk to you about the dollar, and the dollar is going to be really key coming up. I would not rule out the dollar having a nice rally, whether it be a nice big correction or an impulsive rally here. Either way, I see the dollar rallying. It might not even be this fourth quarter. It's possible that it could go into the first quarter of next year. But I do see the market rallying. We do have this, as you see, this bear flag. And if we could break the bear flag, make a higher low here, I think the dollar takes out the 200-day moving average and gets back up into this 81, 82. Really, that's all you need. If the dollar posts some sort of a rally here into this sideways consolidation area we had in the past several months, I think you can get a 2-3% correction in commodities and equity markets, and then that would be your buy-in point. And that's where we're going to watch the dollar here. Now, just take a look at a weekly chart. Weekly chart, we're sitting at support. As you can see, we took back this 1 week of this. We've been down 5 weeks in a row. Now, this is a weekly. All right, now we have this one area here. Now, usually when you have this big candle, we usually take back some. Now, I'd like to see where this goes this week. Either we try to make that high low like I indicated on the daily chart, or we break this low, and our next pivotal low would be somewhere around 76. And that's going to be the next point, next target point. But I don't see this dollar really starting to break too much, but it's something that we want to watch and watch on a consistent basis, especially the market is so highly driven on what the dollar does. Okay, so let's go into the charts. Here's a 5-minute S&P chart. As you can see, this was the short squeeze right in here on Thursday I mentioned to you, and then we actually closed back up, and then we opened lower. We chopped around, and then we closed lower at the end of the day. So really, really terrible price action the last couple of days. Kind of to be expected because of the fact that we had a window dressing. And this is really something that I said be careful here because, you know, the big guys, are they going to tighten their books up by selling some stock, or are they going to just protect their positions? And more than likely, that's what they did, just kind of protected their positions. Okay, Spider, daily chart in the Spiders. As you can see here, we did retrace a little bit on the RSI. We've rolled over a little bit. Not enough to get me excited here as far as looking to buy into this market. Not at these levels. I still feel this market's a little frothy for me anyway to look to go put money to work overnight. And that's why daily here. But we do have this bull flag, and this bull flag on the SPYs is bullish. It's a bullish pattern. We're sitting on the 20. We're hovering around the 20 for quite some time now. So we're going to look to see if we break this pivotal low of 143. Okay, at 143, then I could see us testing the 50-day moving average. If we really need to take 145 out. So we're range bound from 143 for 145. Just make note of that when you're trading intraday here. Okay, IWMs. We took this beautiful move up in the IWMs. Good gauge of risk, the Russell 2000 ETF. And now we're just below the 20-day moving average, right? So you can see we're just kind of chopping around from Thursday and Friday. Not really much to tell. But I do look at what's happening here with the volume profiles. We're sitting in some big area of support between this band and this band. So it's going to, even if we sold back down to here, 81, I'd like to see it actually sell a little bit lower, somewhere in this 80 area, 80 and a half, even 81, and then look to reevaluate it. But it's not a bad area here to look to see this consolidation. Now we can go sideways here and then start to break higher too, but something that we're gonna keep an eye on. All right, take a look at the transports again. Gruesome, really ugly looking chart. As you can see, we have broken lower, and this is something that really needs to keep up. The transports really need to keep this area up and not lose this pivotal low. We're really going to need to make sure that we don't want to see the transports any lower than where it is. Otherwise, I think it really could do some damage. But again, guys, honestly, a correction here is really, really normal. I think it's a good thing if we can get some sort of a correction. But who knows? We'll take it one step at a time here. Again, markets are up 5 handles on the good PMI coming out of Europe, so we'll just need to take it one day at a time. But I wouldn't want to see this actually sell off any more than what it has done. Okay, Apple. We had a nice little call last Monday, and I said I wouldn't be looking to buy up in here. I had a bunch of emails asking me where do we go from here. Well, if you take a look at what we are with the stochastics and the MACDs are starting to roll over here. We're having some high volume. We did have a nice big engulfing, and then we took it back on Friday. Now we really need to see where Apple goes. To me personally, a 50-day moving average test somewhere around the 640 to 660 area between where we are here and the low here is really where I wouldn't want Apple to go any further. So 640, 645 to right under this pivotal low of 655, 660. I wouldn't want to see this go any lower than that. So give or take 20 points. A break below this area here. Then I see this area below 645. If you see what I'm talking about, the main pivotal low, I think we'd break down to that 620 area. And you can see the volume profile is really, really thin in this area. So we have a thin zone here. So a quick sell-off to the 620 would be in the card. So 640 to 660 would be your band of support. A breach below that and close, you're going to see 620 in Apple. Okay, that's in the coming days, which will affect the Qs daily. But I want to show you the weekly here because, as you can see, we've tested both of these areas here. And this area is the 68.35. Now that 67.50 would really mark that sell-off. We'll start a little correction in the Qs, and of course that's going to gauge on what Apple does. So let's just keep an eye on that. Okay, a lot to digest. Earnings coming next week. All eyes will be on earnings, and that's something that I like to trade is the earnings season. All right, guys, have a great day. Welcome to the new month and a new quarter, and we shall talk to you tomorrow. Have a great day, everybody. Take care.